Hey, Brecht Palumbo here, and in this video I want to talk about one of the easiest investments in notes that I've ever made, and why I intend to invest a lot more with this company. I'll show you how those investments are going, and I'll take you inside and behind why I'm making these investments. Now, this video is only for accredited investors. If you're not an accredited investor, you cannot make these investments. So an accredited investor has certain either income or asset levels that are determined based on whether or not you're single or married. And so rather than educate you fully on what an accredited investor is, we'll have a little bit of information on that down below. But let me take you now inside of these investments that I'm making, and I'll show you exactly why I'm doing it, and I'll explain why I decided to do it, and I'll show you some of the returns. All right, let's go. So I am investing in first position, fix and flip, and rehab loans, and I'm doing it through Fund That Flip. And I'll tell you that one of the reasons that I'm investing here, two reasons really. The first one is that as an auctioneer, I have sold a lot of, I've worked for a lot of hard money guys. We've sold a lot of assets for folks where with exactly this type of loan. You say, well, why would you do that if you know that they get foreclosed on and if it's risky or whatever? Why would? Well, the reason is that the way that these investments are made, it sounds like it's risky. Well, bridge loans and fix and flip loans, and how do we know what's going to happen there? But here's the deal. The LTV, the loan to value and the loan to after repaired value, is so low that even with all of those foreclosures that I've done, as we're going around taking back projects, the losers in those projects, okay, were not the lender. The losers in those projects were the equity. It was the contractor. It was the borrower. So the borrower takes the money to flip the property. They pay a couple of points up front, and then depending on what their background is and everything else, they're only maybe paying 10% from that flip. Others I've foreclosed upon, they were deep in the teens. But the deal is that the position is so low in the stack. When you're first position and you're only at 60 or 70%, then even if there are mistakes are made, then even if you have to foreclose, even if you have to correct that, then there's still meat on the bone. And on the one hand, during the last financial crisis, we'll see what happens in this next one. In the last financial crisis, my hard money lenders who made these types of loans, they're going out and they're foreclosing all over the place. They were actually a terrible client for me as an auctioneer, because I would only get the service fee, because there was never a success fee, because we never sold to third parties. And the reason we never sold to third parties is that they knew that if they just bought it back, they'd finish it up, they'd sell it, and they'd still get a positive, net positive return in the end most of the time. Now, that isn't to say there's no risk here, okay? If you are looking for high returns and no risk, I don't know what to tell you. Check another planet, because it's not happening here. But if you are reasonable about your risk, and again, you have to be an accredited investor, so you should be able to afford to do this, then let me just walk you through why I'm doing this. So there's really two types of notes that they're doing here, and I have invested in both, and I'll show you my very small portfolio that I have with them in just a minute. The first one are these RBNF series note funds. And so it says the opportunity through the purchase of notes issued by this residential bridge note fund, LLC investors, blah, blah, blah. Basically, this is a pool of money that gets loaned out first, okay? Your money is spread across, your investment is spread across a number of properties, a bigger number of properties, as opposed to going in and picking individual properties, which I have also done. So you can see this one, they're offering an annual return of 8.5%. The term is 8 months, so it's pretty short-term money. And the funds that they're doing are pretty small. You can see this one's $1.25 million. Let's go back where they're more like 500,000. Here's one for 750,000. This is, what is this? Pre-funding note fund LLC. Okay. Now invest in a line of credit used to pre-fund first position mortgages originated by FTF lending. That's fund that flip. And so you see they're paying 8%. And they've got 550 out of 750,000 so far. We'll talk about these bridge note or flipping note properties next. Here's one, South Boston, Mass bridge loan. 2 single-family homes, 2 two-family homes, 1 three-family home each, 2 to 4 bedrooms, blah, blah, blah. The offering, the total debt, $4.2 million. The APR, 9.25%. The after repaired value that they're in for is just 75%. So here's one, Columbus, Ohio, 1.6, Boston, Mass, 4.7, but there are also much smaller ones, 419,000, 161,000, and so forth. So let me just take you in here so you can see what these look like. So here's the loan to after repaired value, 70%. It's $161,000 total offering, minimum investment of $5,000, and it's only a 6-month term, which is pretty nice. And what happens is, and I actually had this happen on one of my notes, if they don't get out in that time, then there are fees, and you share in those fees. And you'll see that this is the underlying assets is single family. It's a 2 times personal guarantee on this. And the underlying security is a first position. So far, this has got 120,000 funded out of 161,000. So the other thing that I really like about this is sort of the due diligence that they do. So they'll show you the cost, the use of proceeds, the percent of the loan. They'll give you the loan to cost. By the way, if you're brokering notes, if you're selling investments to other people, or if that's what you want to do, you should think about how you're presenting your offerings, because the more clear you can make it. The fact that I can just log in here, see everything that I need to do, and I'm like, yes, take my money, without even talking to a human, it's pretty good. It means they're doing a pretty good job. And so you should really think about that. If you're somebody who's raising money, how well can you lay out these options for someone? Anyway, that's a sidetrack. Let's keep going. So we've got the purchase price and then the fund that flip valuation. That's what they calculate. And they've got a narrative to go along with this. They show you about the property and all of the specs that you would need, the market overview, the project strategy, how does this person plan to make money? There's a statement of work. They talk about the developer. You'll have a whole dossier on the developer. These are all previous projects by the redeveloper. So you can see that this is a borrower comes back again and again. That makes me feel pretty good. We're loaning to him over and over again. That's probably a pretty good shot. The way that you invest in these, you connect a bank account and you basically just type it in there and you click invest in deal. Now I'm going to go show you my own investments right here so that you can see what I am doing. Like I said, I just have a little bit with them right now. It's $20,000 and I've only been in there for a couple of months, but I really like them. And I'm going to actually, in this post down below, I'm going to have a link to one of the things that really enamored me of them is I listened to a call about a workout with them, and they walked through the whole strategy on what they did when they had a loan that went bad. And I said, these guys know exactly what they're doing. I should give them more money. And I plan to do that very soon. I've got $20,000 invested so far. This May, I've earned $119. Total earned has been $318. Again, it's just over a couple of months. Right now, I have 4 active investments, one of them that I just got into, and you can see that last payment here, May 19th, May 18th, and I guess I started in February, then I did another one in March, and I did another one in May, and then I've actually had my first one pay off. This one paid off. I invested $5,000 and I got a 9.43% return, and I think that's pretty good for being guaranteed in the first position. There's nothing on top of you. If they have to go collect, you're in a really good place. So the APR on it was only 7.75, but the annualized return ended up being 9.43% because this particular loan, they had to pay fees to go late because they didn't close it out in time. Right now, I'm in 2 of the funds that they have, warehouse lines that they have, and then I'm in 2 individual properties. I'm really gonna go pretty long here because it's easy, because all I have to do is connect my bank account. I come in here, I go, I look at the different options that they have. I find one that's got a rate that I like. I actually like the smaller dollar ones a bit more. When you're talking about things that are hundreds of thousands, low hundreds of thousands of dollars, those are easy cures. People are always going to be buying properties in that range, always, right? While I'm really like a huge fan of these guys and I think they're doing a great job, that doesn't mean that when you make these investments that you're not doing it without risk. There's always risk in order for you to get a return. So don't think otherwise. If you have any questions about this, or you want to chat about this, go ahead. I think we'll probably have comments open below this and that'd be great. But otherwise, click that link, go over there. If you're an accredited investor, get signed up with them and make some investments because it's easy. And that return, let's face it, folks, if you're close to 10%, you're almost 10% and it's this easy, you don't have to do any work for it, I think you should do it. So that's it. Make it a great day. Thanks for watching this.